Hey guys, Mike here. So after today's big sell-off this morning, I figured it'd be a great time to put this video out. And what this video is talking about is the high growth stocks that are referred or actually recommended by a service you have to pay for, which I'm actually not recommending it and anything. I'm not going to tell you what the service is. I just wanted to get the recommendations, build a track on them to see how they're doing, but let you get overall a short-term picture versus a long-term picture as far as how long we hold these stocks and panicking out of stocks and everything else with a day like today, for example. Okay, and I'll tell you who recommends them so you can put two and two together if you want to, but that's not the point in the video. I'm going to put them all on a spreadsheet for you. You get to see the returns over the last since May through today, and then we'll look at some from last year to today and see how they've done as well. And they're all high growth stocks, okay? But obviously today was a big sell-off. You can see right here by the chart, dropped off a cliff. I was not surprised at all because did a video Tuesday I put out about the S&P, maybe a sell-off correction, whatever. And this is the reasons why. So who knows what this is going to turn into. Could turn into more of a sell-off, could turn into a correction, could turn into nothing, okay? I always look at this as, institutions use an excuse, like they use the bond yields going down. Well, bond yields have been going down now, okay? And so, but all of a sudden now, it comes to a head, right? I just look at it as that this is their way of running the indexes down, getting the stocks on sale to start the next quarter and the last 6 months of the year to build up their, portfolios and make a lot of bonus money. So we'll see where this goes. But as I told the members this morning, don't panic. It's normal. I showed you in that video on a spreadsheet how many 5% sell-offs, how many 10% corrections there have been each year in the S&P. So, we're still here. Index still goes up after all this, okay? So all I'm asking from you, hit that like, subscribe button. If you get anything out of this, don't forget to hit that link down there in the bottom of the description. Open your account with BlockFi, and you can earn interest there. Also, they're getting ready to start rolling people off the waiting list for their credit card where you can earn Bitcoin on your purchases, and it is a 0% dollar annual fee. So there's no annual fee to hold the card. It goes through Visa. You can earn Bitcoin back on your purchases and stuff like that. And having said all that, let's go ahead and get into what I'm talking about with these high growth stocks and how they're performing. And so obviously Luke Lango, or Longo, however you pronounce his name, is the guy who puts these out. And so he was ranked number 1 at one point in time with an 84% success rate, average return of 63%. And then if you look at today, what this is up today, he's still ranked number 29 over the last 2 years out of 8,000, 64% success rate, 27.5% average return. And you can get this over at Tip Ranks if you want to know this information, by the way. Links down in the bottom. If you look at the last 3 months, 61% success rate, 20% return over the last month. 55% success rate, 7.6% return over the last 30 days. And so obviously he is highly ranked and thought of and stuff like that, and I've kind of looked him up, and he's been a good stock picker, even though you'll see how hard it is to pick successful stocks and everything, especially in a market like this. And I made this spreadsheet for you. I'll go ahead and warn you ahead of time. You're going to see a lot of the tickers are starred where you can't really see the whole ticker because I don't know what the rules are when it comes to, or the laws or anything, when you're coming from a paid service, what they're telling you and you put it on here and put it out to the public. I don't know, so I'm not going to take any chances. Hope you can understand that. You'll see some of the tickers, the mainstream tickers that we all know anyway, but a lot of these you might not know, and you can probably put it together if you try. But that's not the point in the video anyway. The point is to understand these are real stocks. I'm going to show you the spreadsheet to show you the returns and everything we've got over the last 2 months and 8 days versus what we did from what we would have done from last year if you held on to some of the ones that were recommended last year when it comes to these high growth stocks. So a lot of them take time to pan out and sometimes takes 2 to 5 years of what you're looking at. So the whole point in these stocks is long term because it's high growth, right? And so if you look at the spreadsheet, and so what I want you to pay attention to obviously is how much yellow versus white there is. Yellow is the losses, white is the gains. And you can see we got a ticker symbol, the price of what they recommended to buy it at, the current price right now today. Let's say you put $1,000 in each one of these and make it simple. Percent gain and loss, dollars gain and loss, and then the total of what the $1,000 will be giving you right now. Okay, and you'll see something like MUDs. Everybody knows what that is. And understand a lot of these, like MUDs was up much higher than it is now. Okay, because it did a big run up. Some of these did some big run ups throughout this time frame, but I'm pretending you're still holding these right now. And you're gonna see some big gains, like the one right there at 46%. Big losses, 41%, 29%, 22%. And so as we scroll down, you got quite a few in here. And obviously a big one right there at 42% gain. You got a big one right there on Wish, and Wish ran up way more than 11. So if you had sold out even higher, you would have even bigger gain. Clove obviously was way up like 25, but right now if you currently still hold it from the day they recommended it, which I believe is in May, you'd be sitting at, you know, almost a 30% loss in your portfolio right now. And so you look down there at Voozy, that's a big one. Ark's buying up right now like crazy. It went to 27 at some point in time, even though they recommended it after 27. I did look at that in the chart. And so when you look at it, you think, my God, that's a whole lot of yellow. We must be losing our shirt right now if you're still holding all of these stocks. But the truth is, actually, you're sitting here down a whopping 0.5%, only down $233 overall out of 46,000. Okay, I mean, that's where you're at right now. So when you look at it, you go, well, this is going to be really bad. No, you're only down $233. That's if you didn't sell some of them when they ran really high, when they had no business being way up where they at, or they got become a meme stock or something. You'd actually be up if you sold at those highs, as a matter of fact. And so that's holding on short term right now. It's only 2 months and 8 days if you've held these stocks right here. Some of them more, some of them less than obviously 2 months and 8 days. But now if you look down at the bottom, and you sit here and look at some of these that they recommended last year, like here's the MSTR recommended 146 in October, ran up to a high of $1,272, but right here it's currently still at 622. So even if you're still holding it, you're up 325%. You would have been up over 600% if you'd have sold at the high. And so your $1,000 is now worth $4,247. CLNE, December at 550, ran up to $19 for crying out loud. Still sitting at 9, so you're still up 64%. Workhorse, they recommended in August 16. They were late to the party on that one, but it ran up to 41 in February. And I didn't even bother going past that because, I mean, that's 156 game, but that's after that they lost the contract and went all to heck in a handbasket. NEO, of course, 325 in May. 46 today, you'd be up 1,315%. If you were sold at 68, you'd be up much higher. But that $1,000 is now worth $14,000. And that $4,000 is now worth $22,601 just on those 4 stocks alone. And so the longest one you've been holding on that one would be NEO, which is a little over a year now. And the rest of them not even nowhere near that long. And so, of course, why am I looking at this? Why did I even bother doing this research? Because I wanted to visually show you that, one, there's a few things here. One, that how many, on those last 4 down the bottom down there, how many corrections and sell-offs did we go through just in the NASDAQ alone last year? Because these are high growth stocks and most of these are on the NASDAQ. You know, you're looking at one crash, which don't count because these were after the crash. One correction, which was either the September or was the October. Then there was one sell-off. And then coming in this year, what happened? Major correction for high growth stocks. So even through all of that, right, if you just held, you saw the percentages, you'll be up just in those 4 stocks. Even if you just held, I would highly recommend now, if things become a meme stock, to sell at the highs. Not financial advice, of course, but as you can see, another thing, that's 2 to take away from this, is Clove, or whichever one you want to look at, Workhorse, any of them. You see, if they become a meme stock and then go way up here, you know, I'm going to have an exit strategy. If I'm in them, I don't do meme stocks, but if you are, you can go, wow, I might need to go ahead and get the heck out because my percentages are much, much lower, okay? And then you just buy back in when it settles down, right? And you can buy more, right? It wasn't supposed to go that high in the first place. Third takeaway, stocks aren't going up, even growth stocks, as fast as they were in 2020, right? 2020 is over. That's done. I wanted to visually show you that. That is done, okay? Over. That may happen again in our lifetime. I don't know. But right now, you're going to have to work for your gains, okay? And it becomes a meme stock, yes. You see these crazy returns on these meme stocks. But if they weren't that, you really don't see, you know, even from May 12th through, you know, July 8th, a lot of the growth stocks still are struggling to get back to even where they were at before they started to crash on, I'm sorry, February 12th was the actual correction in high growth stocks. May 13th was when they started to actually move up. And so some of them are still haven't gotten back there, and some of them did, and then they started selling off again, right? And so, you know, that's a third thing you can take away this and actually see it and go, wow, okay, maybe, 2020 was an anomaly. All right, if it comes back, great, would love it, but that was an anomaly, okay? And so you look at the charts and say that. You know, 4, what are we looking at? What happened today? What happened a couple days ago? You know, the market is frothy, or whatever word you want to use. It's, you know, when you're setting all-time highs on all the indexes, you know, and S&P's been going up for a while now, you're going to see sell-offs and corrections. They're okay. They're normal. You saw the bottom. I can show you thousands of other stocks that are higher than they were even through all these sell-offs and everything else. You know, I mean, we went through the biggest one of the biggest crashes we've seen in most of our lifetimes, but obviously '08 was even worse. But, you know, even from '08 to here, look at the charts. We're higher than before, right? And the stocks are higher. So it sucks, but it gives you an opportunity to, if you take all that stuff away and take all that stuff in consideration, to understand it's just a chance to buy your conviction plays. That's what it is. Is your you know, at a cheaper price. I mean, who wants to buy, you know, NEO at 55 or whatever it is the other day, when now all of a sudden you can get it for 40 something? Maybe you can be able to get it lower than that, you know, if it keeps going down. You don't know, or XPing or Tesla or whatever you're looking at, you know. And so that's not a bad thing. It's not a bad thing. And think about that list right there I showed you, that big long list with all those negatives, right? And some of them are barely in the negative. But imagine 3 to 5 years from now. Remember, you don't have to hit all the stocks. You just got to hit 60% of the stocks to be making money. 80% to be making a killing, okay, or 90 be even better. But, you know, that's neither here nor there. But imagine how many on that list are going to be way up in 3 to 5 years. Even at the ones on the bottom, you know, where's NEO going to be? I think it's going to be a heck of a lot more than 45 bucks or whatever it is today that it's sold off to. So that's the stuff. I just want you to visually be able to see it and understand, okay, I get it. I see it right there in front of me. All three of those things you just pointed out. And so instead of just having to, I don't know, make it up in your mind or think about it and go, well, I don't see it. Now you see it, okay? And who knows where we're going to go tomorrow or the next day or whatever. But just be prepared. Have cash on the sidelines. That's why we always got to have cash on the sidelines. Again, not financial advice. But, you know, they always say keep minimum 10%. Maybe in times like this, 20 might be good. But, you know, it's up to you. And, you know, maybe hedge. Right? I mean, I know I showed you in that video when I did the S&P how many people were buying puts on the SPY. It was a lot, right? The put call ratio was like 2 to 5 in some different areas there. I mean, it was high. So well, that's happening for a reason. And so they may go for nothing, but at least you'll be making money if there is a correction or a sell-off. You know, so I just want to put that out there. Let me know what you guys think. Hit me up in the comments, stuff like that. So, and if you got anything out of it, please hit the like, subscribe button for me. Share the video, please. I appreciate that. And I'll end up seeing you guys this weekend.